can see right now, there's quite a lot happening in the markets right now. The Sensex has extended its rally, risen 300 points. The Nifty has topped the 17,800 mark. Nykaa is trading below the rupees 1,000 mark. What are you picking up?
Absolutely. They did extend the rally. Very good morning to you, Adiraj. But now we've pulled off from those high levels of open. So you have the markets that are actually barely in the positive territory of the day's highest point. Let's take a look at what the broader markets and Nifty Bank are doing. All of them have actually slipped in the negative territory, which means that they're underperforming the benchmark indices in today's trading session. And as we speak, Nifty Bank has drifted lower. It is at the lowest point of the day. Take a look at what the broader markets are doing. Your mid-cap index and your small-cap index. And talking about the small-cap index, your small-cap index is actually losing much more than your mid-cap index in today's trading session. If you take a look at what the sectoral indices are doing, remember yesterday you had metals and realty sector that was shining bright in trade, and today it's exactly the opposite of that. You have metal and the realty index that are the top losers, sectoral losers as we speak this morning. You have pharma index also that is trading in the negative territory as we speak. But it's on the flip side is the auto index that's holding on to very strong gains of about 0.8% as we speak. You have oil and gas that's holding on to good gains. You have FMCG also that is bucking overall market trend as well. So you have a lot of a mixed picture coming in this morning. Let's take a look at which are the gainers and the losers on the Nifty. So like I mentioned, you have the auto pack and the oil and gas sector that are doing well. So definitely the names from those particular sectors are ruling the charts on the Nifty this morning. So you have ONGC, Bajaj Auto, Reliance Industries that are actually seeing good strength in today's trading session. And on the losing side, you had the metal names. Top three losers from the metal pack: Hindalco, JSW Steel, as well as Tata Steel declining in trade today. But to understand more about the market setup, the fact that we are in a brand new series, let's bring on board Hemen Kapadia to talk more on the markets. A very good morning to you, Hemen. Thank you so much for joining us on Buy Now, Sell Now, and Happy New Year to you, and Happy Diwali as well. Brand new Samvat, brand new series also. Where do you see markets headed from here on? Do you see that there are chances of Nifty reclaiming the 18,000 mark in this month, in November that we are entering?
Good morning to you, Cheryl. Thank you for having me, and wishing you, entire team at ET Now and all our viewers a very, very happy Diwali and a prosperous New Year. Frankly speaking, we're on the cusp of reclaiming 18,000, but if you see the markets today, Cheryl, it's only been Reliance which has sort of held things up. Everything else seems to be in just a little bit of pressure. We've gone up almost 900 points, Cheryl, and 17,800, 18,100, there is this congestion area, which traditionally has been a source of significant resistance, and we are just over there. So if Reliance didn't move the way it did today, markets would be barely in plus. So the way I see it, markets are a bit tired. They are just a bit overbought. A small correction wouldn't harm. As of now, I think pharma seems to be one bright spot. IT is also showing resilience, and banks also seem to be a bit stretched. So frankly speaking, all over the place, the VIX is below 16.5. If you see, Cheryl, the dollar index has also come off from its highs. So frankly speaking, everything else seems okay, except that we've had a run up without a significant correction. I think that's the only thing ailing our markets as of now. Cheryl.
Hemen, do you see a scope of Nifty Bank actually outperforming the benchmark indices going ahead? There have been a lot of talks of how the outperformance will be led by the banking sector and not the IT sector this time around. And do you foresee it happening anytime soon? Globally, we've seen what is happening with the IT sector and what is happening with the major tech companies because of the earnings that they're reporting, missing estimates. The outlook is looking weak. Do you see that also kind of trickle into the Indian IT pack?
Well, frankly speaking, our IT index peaked somewhere in January end, Cheryl. And since then, we've been on a significant cool off. And if you look at the Nifty IT index now, we seem to be in a corrective bounce. So frankly speaking, we were oversold. The weekly, so the medium term picture has definitely improved. So I wouldn't say the worst is over, but for the time being, You made a very, very valid point. Yes, it's not going to lead the market, but it has been a drag of sorts. I think for the time being, that's not there. It's trying to stage a comeback. It's forming a base between 26,200 and 29,000 as far as the Nifty IT index is concerned. So currently, not much to worry about. Banks is a different ball game. A lot of resilience. A few stocks like Axis Bank, Federal Bank, even State Bank, Shell. Some of these stocks have posted fresh all-time highs in a market which still hasn't come close to the highs. 41,830 has been a roadblock for the Bank Nifty. We are at 41,192. These are spot levels. 41,830 needs to be taken out for a humongous rally on the upside, which is a possibility. We are working towards that. But for the extreme time being, this is a fourth trading session in a row. We've gone nowhere. We've stagnated. We are a bit tired. We've had multiple gaps. A small period of consolidation is what we are undergoing. But till we don't take out 41,830, there are going to be pockets here and there where it will do well. But for the Bank Nifty to stage across the board rally, I think 41,830 needs to be taken out. And I believe there is some more working left before we reach that. Sure.
Right. Then on that note, stay with us. We're slipping into a very short break. Don't go anywhere. When we return, we get you the queries segment and also the rapid fire.
Welcome you.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor Nikunj Dalmia. Only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, today the markets are seeming pretty subdued, a brand new series that we've started. But Hemant, given the fact that we've seen a lot of volatility of late, what's your advice for retail investors in order to protect wealth, given the fact that we've seen such volatility in the markets and it's bound to make investors very jittery?
Absolutely right. Cheryl, it does make people jittery. So if you're a direct equity investor, I think one should go for sound stories, broaden your investment horizon to a year or two. And if you're a mutual fund investor, I think and load up on your SIPs, do not stop for whatever reason. I think it's a great opportunity to continue your SIPs, and there's no harm in starting anything fresh. Or frankly speaking, this it's been unprecedented. This so geopolitical, Russia, inflation, energy. I mean, this happens once in multiple decades. So there isn't any quick fix solution for this. You can try to skirt around it by being slightly more proactive, in the sense go in for defensives or lay off direct equity for some time till there is some clarity on how things would pan out from the Russian point of view. And I mean, basically it's been the currency dollar which has played havoc with all the world currencies, and it has a spillover effect. So frankly speaking, one should wait for things to cool off. But yeah, I mean, every fall, and we've been resilient, and every fall is an opportunity to buy.
Right. Many thanks, Hemant. But with that, we start our query segment. As you all know, this show is your one-stop destination to all your stock queries. Our numbers are live. You can also write to us on Facebook and YouTube. But with that, we start. My first question will be to you, Hemant. Gargi Karmakar is writing to us from New Delhi. She's holding Hindalco, and she's asking, in a short term, should she hold, buy or sell?
Hold with a stop loss of 390. A close up of 415 should take it to 435 and 445.
All right. Let me also introduce Ashish on the show. A very good morning to you, Ashish, as well. And once again, good morning to you, Hemant. We've been really trying to get to you, Ashish. Happy New Year to you. Let me begin by asking the first query to you then from YouTube. And this one is coming from Abhijit. He wants to know about REC, if it's a good buy at current levels for a long term. And the reason why he wants to look to buy this particular counter, he's saying he wants to buy this as a dividend play. So do you think the REC is the best bet if he wants to look at buying it as a dividend play?
Yeah, as far as REC is concerned, you can always buy at 95, 96 levels. Dividend anyway, they have a tradition of rewarding investors with decent dividend yield. But at the same time, I think REC should not be only just bought for dividend yield per se. First of all, we need to see overall outlook of the power sector, which looks quite robust now, and the way reforms have taken place in power sector, REC, PFCs, etc. are going to be a major beneficiary here. So 95 rupees is the ideal price at which surely I'll be tempted to buy REC. So wait for some decline in the market, then we start accumulating this.
Hemant, coming back to you. Kabir Bedi is writing to us from Punjab, purchased 450 shares of Tata Coffee at 218 recently, asking for a short term, which is a 3 to 4 month outlook on the calendar.
We are in a short term and possibly a medium term downtrend. And if I know it's a short term view, but if I look at the charts, 15 months stock has gone nowhere. Phenomenal run up, tired. So no directional bias as of now. Doesn't seem to be going anywhere. Support comes in at 210, 198. A weekly close about 226 could be the first small technical green shoot.
Right. Ashish, I'm very tempted to ask you once again. I know we had asked you this question once earlier on also, and that beautiful chime, it's the wind chime, isn't it?
Yes, it is.
And I'm also tempted to ask you which part of Mumbai has such amazing breeze, given the fact that we rarely see such a nice wind blowing, and it's amazing. It's perfect for a Friday discussion, I must say, that the wind chimes is pretty soothing, and I hope it's able to soothe some frayed investor nerves also. But let me ask the next question. I like how Adiraj is like tripping on what I'm saying right now. But next question is for you, Hemant. Neha is asking about PNB. She's bought it at an average price of 40.15 rupees per share. Does it make sense to book profits? And what target can she expect in the near term, say for about 4 to 6 weeks, if the view is to exit?
Okay, the view would be to exit at around 46. We've been sideways for almost 2.5 years, gone nowhere. But yeah, short term to medium term, the bias has clearly turned positive. 46 is where we run into a roadblock. If she has a slightly longer term time frame, maybe a year and a half, I'd say 55. But as of now, 46 can be considered to be a potential target to exit.
A very good morning, Ashish. This is Adiraj joining in. I would like to ask you, I don't know why, but we are getting on WhatsApp today, we're only getting queries on different Tata stocks. Another one's coming from Abhimanyu Kohli, New Delhi, holding 4,240 shares of Tata Steel at 117. He's asking whether he should hold or sell. He's asking for your advice.
Yes, I think for time being you can remain invested in Tata Steel. Though I caution you, you cannot expect any major gains in Tata Steel per se, because there are 2-3 issues are there. First of all, steel is a sector where a lot of retail investors and traders are struck up at higher prices. So whenever the steel stocks start moving, there's some pressure. Second, again, iron ore prices are coming down, which shows the demand for ultimate steel will subside in coming time. This will be troubling again really what we saw yesterday in the steel sector in Indian context. Third, unless export duties on steel will come down, you can't make the benefit of weaker rupee for domestic companies. And this is the reason we saw very poor quarterly numbers by steel companies in the last quarter. So my suggestion will be just wait for some time, and once stock reaches near your buying level, then surely exit and shift to any other sector where more domestic stories are there, like power sector or railway or defense kind of stories.
From Malaysia, Heyman, and this one is for you. He wants to know if he can buy Balrampur Chini at current price for the short term.
We remain in a short and medium term downtrend. There are absolutely no buy signals from a shorter term point of view to buy. In fact, if it closes below 330 today, that is a weekly chart, that weakens it for a possible downside target to 300. So looks weak, stay away, no buy signals yet.
Hemant, coming to you, Anand N is writing to us from Gurugram. He has 370 shares of Jindal Poly at 909 per share. He's currently at a 7% loss. Should he average or hold for 6 to 9 months?
I don't think it looks like an average because stock's gone nowhere in the last 1.5 years.
Right.
It doesn't look like. So I'd suggest wait or keep the stop loss of 770.
Right, this one is coming from a Twitter user. It's a Gajanan who's actually written to us, and he wants to know about Latent View Analytics. I know it's a recently listed counter by Hemant. Do you think you can help on this one? He's already holding 50 shares at a price of 570 rupees per share. He wants to know about the 9 to 10, 12-month horizon on this one. What should he do?
Like you said, Cheryl, paucity of data. So caveat is that we're doing with whatever data we have, obviously. Bias is turning positive, setup has improved, range between 350 and 420, a close above 420 should trigger off an intermediate uptrend. Looks promising, but these levels need to be respected. As of now, it looks good for an upside.
Right. Coming to you again, Hemant, Chirag is writing to us. Stock he's asking for is Max Ventures. He has 65 of it, and at 1600, should he hold or sell?
I think he should wait as of now. No clear view. Hold as of now.
Okay, a couple of short-term queries actually. Let me try and look for a long-term one for you actually, in particular, Ashish. Okay, I think I have this one is coming in for from Jayakrishnan. And Jayakrishnan has Pidilite at a price of around 2,692 rupees per share. Wants to know what to do for the medium term. Makes sense to continue to hold on to Pidilite or look to sell or average?
At what price investors entered into? Can you?
Pidilite price is 2,692.
At this price, investor is bought, right?
Yes, that's the buy price for the investor.
Okay. Yeah. So I think an investor is losing 130, 140 rupees, but my suggestion will be to remain invested in Pidilite. Again, the reason is the crude prices are stabilizing in between $90 to $100, which is again raw material for them because they use resins and derivatives which are made from crude. Second thing, domestic markets are again picking up, construction activity, renovation activities, etc. going up, and you, as a Pidilite, enjoy the market leadership position in whatever the segment they operate. And last quarter-over-quarter numbers were also quite good in Pidilite. So my suggestion will be to remain invested, and my one-year target is again 2,900 in Pidilite.
Ashish, coming to you again. Anjali is writing to us from Nashik. She's asking for a technical view on Power Grid. Has bought 211 November futures.
Bias is
and what's the time horizon?
She's not mentioned a time horizon.
Okay. So as I mentioned, I'm quite bullish on power sector stocks. Again, the reason is this is a sector where FIs are also buying now in Indian equities while they are exiting from IT and pharma sector, etc. But power is a sector which will be unaffected by whatever is happening globally. Second, demand is going up in power for power consumption from domestic industrial users as well as retail users. So these companies will keep on minting money and showing good result quarter over quarter. So Power Grid is again a stock which you can remain invested, and you can roll over this future at least for 3-4 months and can get good returns here.
This one Is coming from Abhijit, and Abhijit has bought Nykaa at a price of around 1400 rupees per share. He's taking huge losses, and we all know about it because Adhiraj did mention where Nykaa stock price is today. He wants to know what should it be his strategy for the short to medium term. Should he look to average it down at current level or book losses? Hemant, do you think you'll be able to help with this one?
1 second limited data, but whatever data there is, Cheryl, technically, unfortunately, no good news. There was not a possible double bottom at 1200, which has now been breached. So newer lows every day, not looking good. It's an exit. You'll have to bear the pain because there's nothing here that seems to suggest a reversal as of now. I don't know if things change in the future.
Right, Ashish, coming to you. Thomas George writing to us from Kochi, 100 shares of Cummins India. Cummins Limited, my apologies, bought in a month ago at rupees 1,216. Prospectus for future growth can hold for 2 to 3 years. What's your advice?
Yeah, I think you can continue to remain invested. As I told you, power sector and power ancillary stock will continue to do well. And these are the stocks where FI is also chasing aggressively. So your Cummins, your ABB, Siemens, Power Grid, NHPCs, etc. They'll all do well. So remain invested here.
This one is from Akash Matthew, and this one, Akash Mathur. I'm very sorry, apologies on that note. And this one is for you, Ashish, and it's a very tough question, I feel. But he's saying that he's booked 10% loss in Adani Wilmar today. Now he wants to know which is that non-financial stock that he can look to reinvest the money in order to recover the loss and gain some more.
Okay, so I think big loss is booked in Adani Wilmar by almost 10%. So I suggest instead of this, you look for some diversification, at least couple of stocks you diversify so that on one stock your reliance is not there. So my suggestion will be to look at a stock like NHPC and TFCI. I think these both stocks, if you'll put in 50% of money, then surely whatever the losses you have incurred in Adani Wilmar, you'll able to recover. Again, as I told you, NHPC is again a story where FIs are every quarter basis, they are increasing their stake. And this is India's #1 green energy company in terms of PSUs are concerned. So a lot of re-rating is due in NHPC. As far as TFCI is concerned, again, the stock is available just as 700 crore market cap under new management, and the way hotel stocks have performed, I see this stock will be in 3 digits in next 3 to 6 months time frame. So you will surely able to recover your 10% loss if you divide your investment between these two and just remain invested for a quarter.
Another one, Ashish, coming your way. Rakesh is writing to us from Delhi. Should he sell KPR Mills and buy NMDC pipes for long term?
No, I suggest you remain invested in KPR Mills only. This is very sound company as far as financials are concerned. Though slightly out of favor nowadays, these textile stocks because of some recession fear in US and European market. But these are the companies which make top quality cotton and fully integrated mills are also there. So my suggestion will be instead of looking at a pure commodity play like NMDC, just remain invested here. At least for 6 months, and you will surely get good returns.
Right. This next one is coming from Dikshita Mahindran, and she wants a long-term view on Vedanta. What's your take on this one, Ashish?
Any decline should be used to accumulate Vedanta, in my view. Good dividend yield stock. At the same time, they have a very diversified a portfolio of commodities like copper, zinc, silver, oil and gas, everything they are having. So my suggestion will be all decline should be used to buy Vedanta in your portfolio. It will be the one of the best performer non-ferrous play.
Right. Ashish and Hemant, stay with us as we slip into a very short break, but don't go anywhere. We'll come back and continue the query segment, and then we've also got the rapid fire left.
seconds.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is down.
Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
With start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for a consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
But I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I don't want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Welcome back to buy now, sell now. We still continue with our query segment. Coming to you, Hemen, this one, Akshay is writing to us from Dubai. He has 100 shares of Pidilite at 2050. Should he continue or hold or exit? He also has 100 shares of Asian Paints at 310. He's also asking whether to hold or exit. So Asian Paints and Pidilite.
But if it's a longer term view, both the stocks, Pidilite and Asian Paints, are in 35-year uptrends. I repeat, 35-year uptrends. What we're seeing right now is just a cool off intermediate correction, but the main underlying main trend remains unequivocally bullish for the last 35 years, and that hasn't yet changed. And I don't see any technical evidence of a bigger picture getting spoiled. So as of now, it's a cool off from a medium term point of view. We had a run up for both the stocks. I think that's about it. So, but yes, if he has a slightly shorter term view, I think it's a sell on bounce because the picture has got been a bit murky. It's going to take time. There's a recovery which might not sustain, but it's a long term clear.
Right, coming back to you again, Hemen. Shishil Dubey is writing us from Indore, 150 shares of Graphite India at 722 per share. What to do?
Oh, he's managed to get the wrong side of it. Firstly, there's very strong support at 350. I think this level is important. Firstly, to make it safe, a stop loss of 320. Hold as of now, oversold. We need a close up of 400. That would be the first technical green shoot coming in. Following that, if 460 gets taken out, we are in for an intermediate uptrend. So hold, oversold, downside appears limited.
All right, hang in there, Hemen as well as Ashish and the viewers. We are just cutting across to the SEBI chairperson who is speaking at IIM Bangalore.
This is insider trading, boss. This cannot be anything else, right? So when you have the power of that data, and more importantly, you have the power of visualization. And I keep telling my colleagues in SEBI, never underestimate the power of the visualization. Because at the end of the day, the analysis is for you, but when you have to use that analysis to convince other people, your best friend is a good visualization. So we use data in our surveillance. This was an example I gave you of insider trading. We have similar algos for front running. You know what front running is, right? There is some mutual fund fellow or some broker who knows that a big trade is coming into the market and he front runs that trade. Now, you know, I was at a conference recently which was hosted by ISCO, which is the association of all the securities regulators across the world. And when I was sharing, you know, over the breakfast table with somebody that our algo is able to detect whether the front running is happening at the mutual fund or at the broker end, they said, no, how can you know that? And it's actually really simple. Because if the trades of the same mutual fund are being front run, it's obvious that the leak is at the mutual fund. If the trades of multiple mutual funds are being front run, it's obvious that the leak is at the broker end. Now, it's very, very simple, and this is not even, you know, fancy big data stuff and all. It's just simple algos written by young people who just love their job. And with this, the kind of power that SEBI has been able to harness in order to identify misconduct in the market has been just amazing. Of course, we've had our setbacks because the regulation has not kept pace with technology. And we're now busy trying to fix the regulation because the regulation does not support what the technology now is able to do. But we think that we'll get there in a few months. So it's this richness of the data. It is what it can do for you. It is what it can do for the market. And it's just so much fun doing it. Apart from looking at data for surveillance in terms of data on, in terms of filings from various entities, right? All listed entities have to do various filings with the stock exchanges so as to ensure that there is no information asymmetry, right? A market, the fundamental premise that a market is efficient.
That was the SEBI chairperson addressing at IIM Bangalore. But let's move on and let me get the next query coming in from Sapna. Wants to know whether she can hold Cummins India. I believe we've already taken Cummins India query a while back. So let me take another stock query then. And this one is coming from Nikhil Bhatt. He wants a technical view on Dwarikesh Sugar. Should he enter the stock right now or should he wait? What's your take on this one, Hemant?
Well, frankly speaking, the entire sugar pack is normally out of 10 times, 8 times led by Balrampur. We just spoke about Balrampur. Technical setup is not good currently. Dwarikesh, slightly resilient, but no, corrective. Monthly chart, all the major mechanical indicators are in sell. So is the weekly, so is the daily. So frankly speaking, despite being oversold, I don't see any technical reversals or technical green shoots. One needs to wait a bit for the stock to turn around. Currently nothing happening. A close above 110 on the weekly would be the first indication of a possible turnaround. Currently nothing, it doesn't look like.
Right, Hemant, coming to you again. Vishal is writing to us from Dubai. He's asking whether it's a good time to add Tata Chemicals and Borosil Renewables.
Tata Chemicals remains safely ensconced in a longer term uptrend, absolutely no doubt. 9 months of a sideways move between 1040 and 1200 on the upside, 1220. I would say it's a buy on declines. Currently, there's just a little bit of a negative bias on the short term charts. So there could be some pressure, especially on a close below 1130. So I'd say buy on declines. And as far as Borosil Renewables is concerned, we walked into a correction of a greater degree after a phenomenal run up from 20 rupees to 820. I mean, normally when you have such multi-baggers for a year or year and a half, stock goes for a toss. Prolonged consolidation phase, nothing happens. So that's what's happening right now. Strength, yes. A close below 520 could mean some downside. Going nowhere, I think it's going to take some time to recover from his wonderful up move.
All right, on that note, actually, let's slip into a break on this edition of Buy Now, Sell Now. We're hanging there, Ashish, as well as Hemant, because we will be continuing with the queries after the break as well. So viewers, stay tuned.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
ADT now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, Only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's continue with the queries then. And this one is from Matthew from Kochi, and he's saying that he has 5,000 shares of Equitas Small Finance Bank, which he's purchased at 53 rupees per share. He wants to know what's the long-term perspective for this counter. He's a long-term investor, so should he continue to hold on to this one? What's your take, Ashish? I believe you'll have to unmute.
So what I was advising that the small finance banks, be it Equitas or Ujjivan Small Finance Bank, both have started performing of late now. And the way banking and financial service sector demand is coming up for credit, and particularly in SME and retail segment, these banks will continue to do well. So my suggestion will be to remain invested in Equitas Small Finance Bank, and also even can add Ujjivan Small Finance Bank, which is at 25 rupees price.
Right, Hemant, coming to you now. Persistent System holding 70 shares at 4,295. Wants to hold till 5,000 plus target. What should be the time frame? TP Vinod is writing from Tamil Nadu.
Minimum 18 months, realistically 24 months.
Okay, this one is coming from Padma Bal, and she has 2,000 shares of BHL, purchased at levels of 60 rupees per share. NHPC level of 40 rupees per share. In fact, both of these ideas she had picked on after it was advised on this show itself. So she wants to know whether she should continue to hold, sell or switch. What's your take on this one, Himen?
BHL clear hold. We are going to walk into a virtual roadblock at 80. I'm not sure if she wants to do a trade and then buy it back. But yeah, if she does intend to book some profit, it has to be 80. Beyond 80, the stock will gradually gravitate towards 95 and 110. But this is more of a 12 and 18 month point of view. 80 is coming soon. Maybe that's where she can book profit if she wants to. Longer term, it's a clear hold. As far as NHPC is concerned, I believe stocks at an all-time high. We don't have any known resistance levels, so we can expect some selling pressure. Seems solid. I think as long as it remains above 40, outlook remains positive. So hold for NHPC.
Right. Again, this one's for you, Hemant. Manikanda is writing from Malalapuram. He's bought 100 shares at 56 of Transformers. He's asking for a mid-term view.
Okay. Short-term uptrend, medium-term uptrend. We are walking into resistance at 84. Hold as of now. To protect profit, if it closes below 62 on the weekly chart, you can exit, but otherwise hold. We are heading for a clear upside.
Right. Let me take this next query. A lot of short-term queries, Ashish, but let me just find one for you. And this one is coming in from Subi Reddy, 400 shares of HSCL. He wants to know whether you should hold, sell or add some more for the long term. HSCL, do you think that it's a good bet to stay invested in for the longer term in the first place?
Yeah, actually, only one problem is with the stock, it's not going anywhere. In spite of 5G announcement, defense, and whatever positive developments which we see happening in this sector, only HFCL is not going anywhere as such. So, my suggestion will be instead of HFCL, I'll suggest you one more stock which is in sugar sector, which is Kothari Sugar and Chemicals Limited. This is around 46 rupees stock. And on November 3rd, their results are there. Last year, they made a profit of 34 crores. And first quarter, they made 22 crores. So I'm expecting a bumper year for Kothari Sugars and Chemicals. So here you can make more quicker returns and better returns compared to holding HFCL. Because HFCL, unless it breaches its earlier highs, we are going to see a lot of pressure there. So better to buy Kothari Sugar.
Right. Queries coming on BHEL. Rakesh is writing to us from Chandigarh. He's holding BHEL, 70 stocks of BHEL at a buy price average of 67. He's saying now BHEL is at 74.25 and he's made a profit of nearly 5 lakhs. What should he do? Should he book out or profit or make profit now? Oh, this is for you, Hemen.
Okay, sorry. I think he can wait till 79, 80. That's where he can book profit.
Okay, let me take this one. This one's coming from Parshuram. He's bought 400 shares of Zomato at a price of 96 rupees per share. And currently it is sub those levels, definitely, Ashish. Now he wants to know whether he should hold on to it or how can he look to cut his losses?
See, Zomato is a long-term bet only. There's nothing just going to happen in very short period of time here. So if you are having patience, can hold for a couple of years till the time the company comes in the profit, then only you are going to make money in Zomato. So accordingly, you need to take a call. In short term, I don't see any major trigger in this stock.
Right, and with that, we start my favorite segment of the show, the Rapid Fire. Ashish, coming to you. Ramesh is writing to us, holding 1,000 shares of Manappuram Finance at 140 and Shriram Transport at 1,400. Kindly advise future of these stocks.
Buy even more both. Right. Both are looking very promising.
Okay, this one is from Chandrasekaran. Wants to know about Tata Chemicals. Is it the right time to enter or the results are priced in? He wants a 6 months view. What's your take on this one, Hemen? What should he do with Tata Chemicals?
Buy at 1150, 1090, target of 1300.
Right, Hemen, coming to you. Coverage is writing to us from Jaipur. IIFL Securities bought at 160. Long-term perspective.
Hold stop loss of 65, target of 90 and 105.
Okay, another coming your way, Hemen. Madhuri is asking, is it the right time to invest in auto stocks like M&M or TVS Motor, or has she already missed the bus for the medium term?
Well, frankly speaking, yes. Medium term bus is missed, but Mahindra & Mahindra still look good on longer term.
Ashish Murali is writing to us from Muscat. He's asking whether it's the right time to buy Tata Elxsi.
No, avoid.
Right.
Okay, Ashish, Indu wants to know about CMS Infosystems, buy or avoid. What should she do?
Avoid.
Right. Hemen, this one's for you. Hemen's writing to us. He's holding 700 shares of Schaeffler India at rupees 3,300. Has fallen drastically. Long-term perspective.
Move from 700 to 3,900. Forget the stock for a quarter or two. Bigger picture seems promising, but like I said, quarter or two.
Right.
All right, this next one is coming in from one of our viewers, that is Chintan is holding 100 shares of UPL at current market price. It's not rising much. Can you continue to hold on or move to other counters altogether? Ashish, what's your take on UPL?
I suggest to continue to remain invested because sector outlook is quite positive.
Right, and my last rapid fire. Ramesh is writing to us from Delhi. He's asking for a perspective on Nykaa. This one's for you, Hemen. Sorry.
Was bad, is bad. No.
All right, and that was actually Adaraj Diwali gift for all of our viewers, because we were out of time on rapid fire. But with that, thank you so much, Eamon, as well as Ashish, for joining us on the show and resolving all of our viewer queries. And viewers, if you've missed your queries today, please don't be disheartened. We will be back on Monday, where we will be taking your queries. But for now, we are completely out of time on this edition of Buy Now, Sell Now. It's a goodbye from Adaraj, myself, and the team that put the show together.
आग को फैलने से रोकना मुश्किल.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is like, नास्तिक है, उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
We are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
The first headline continues to be markets, where we are tracking what's happening with the tech stocks globally. Broader markets, however, are underperforming. A lot of results play in the market. Metals, which actually saw an up move yesterday, is seeing some profit booking today. The Monetary Policy Committee of RBI will hold an unscheduled meet on November 3. The key agenda will be to fight against inflation, which has remained above 6% tolerance level throughout 2022. Strong Q2 for PNB Housing Finance, and also they have a new CEO who spoke exclusively to your channel, targeting 10% loan growth in FY23. NIMs in the range of 3.2% are sustainable. There are no challenges for growth going ahead. Eye on key earnings today. The likes of Maruti, Dr. Reddy's will be declaring the numbers. Dr. Reddy's should be out anytime soon. Watch out for the contribution coming in from Remlevimid and what's that 1 month or the first push sale that they do.
Hello and welcome. You are watching Markets at Noon on ET Now. I am Anisha Jain. With me is Pankaj Poddar, and Pankaj, you and me seem to be in the pink of health, though I'm suffering from a cold. But
no,
the
it's
market
completely different, right? You have a pink jacket and a black shirt, and I have a
It's
pink...
a contra, but at least you're matching in a contra way, right?
So yeah, that's how our markets are also contra. Mid caps are down, large caps are
Exactly,
flat.
I was saying the same thing.
So,
the banking index is in the red, the frontline index is in the green. So there's a bit of contra at play even in the market. So that's how it is.
But a lot of things to watch out for. We'll start with the markets first. 22 points higher for the Nifty of the day's highest point. E-commerce continues to be the most talking point of the newly listed new tech age company. Actually is what I should say should be as a part of that entire list that we are talking about, that they are in focus. They are the ones that people are focusing in on. SBI Cards is down 5%. That's a results reaction. Some of the metal names are actually cracking in, and this is coming in after really what's happening on the entire phase of what's happening. What happened yesterday and what in the last 3-4 days, some of these names have done well. Tata Chemical is down 3.5%, Jindal Steel is down, Page Industries, ABB, KEI, DCB, Tata Steel. So some of the names that actually did well earlier are now looking in weak. Narayana Hrudayalaya is up 10%. Honeywell is up 6%. I don't know if there is any news flow. Dhani Services, Upper Circuit, Web of Glev, results reaction up 4%. Apollo Hospital up 3%. Kalpataru Power, Oil India, Shoppers Stop, IIFL Finance are some of the other gainers, Anisha.
Oh, well, yes, and on Honeywell, as you pointed out, it's the global peer which has actually raised guidance, and that is having a rub-off impact back home as well. So Honeywell, that's the reason, has moved 7%, and all the hospital stocks that you talked about, whether Narayana Hrudayalaya, Apollo Hospitals or Max Healthcare, the reason is perhaps there is a fresh IPO around the corner. Medanta's IPO opens next week, and we usually see there is a sentiment impact. Of course, there's no fundamental reason for that. Not Vedanta, but Medanta IPO is going to open in the coming week. So that is something that we are tracking as well. Okay, so those were the top stories and the top stocks that were in focus. Let's welcome on board Naresh Mirani to talk to us about the market technicals as well. Naresh, hi, good afternoon. What to do with this weakness in the Bank Nifty today, Naresh?
So the Bank Nifty has done a big move, and till the time we don't see some bit of say leadership coming from a HDFC Bank or a Kotak Bank, it's tough to see Bank Nifty make a further move beyond 41,500, 41,800 zones, which is the previous high. And say a little bit of correction in an Axis Bank from the highs is pretty normal. Same is the case with ICICI Bank, because these are two names which have actually taken the large part of the move. Axis Bank has gone up from 720 just a few weeks back to 900 plus levels. ICICI Bank just hit a new 52-week high. So till the time we don't get support from HDFC or a Kotak Bank, which are the largest weights in the Bank Nifty, we'll find this zone to continue, which is 40,500 to 41,500.
Okay, so that's the take when it comes to Nifty Bank. A very, very definite weakness coming in there. Once we were talking about how it's likely to inch higher towards the all-time high level of 41,840, but there has been a U-turn of sorts. And as you pointed out, HDFC Bank as well continues to languish. In fact, Nifty Bank is now below the 41,000 mark at 40,924. But what about the stock-specific ideas that you have for us, Naresh?
So the PSU segment has been looking interesting across the board. So two names today from the PSU pack, which are trying to make a turnaround, or one is a turnaround, one is a momentum one. First is a buy on ONGC. The stock seems to be getting out of a sideways consolidation. Sustaining 135, 136 would be a short-term breakout. Expect a quick move to 145, 150, a stop loss at 132. Second is a buy on Coal India, which has hit a new 52-week high today, a stop loss at 243 and a target price of 255.
That's a take coming in as far as the picks is concerned as well, Naresh. But let's move on and get you a fundamental voice now. We earlier spoke with Srinivas Rao Ravuri to understand what are his top sector bets. Listen into what he told us.
We've been fairly positive on financial for the last 2 quarters after being underweight for many quarters on the banking space. I think right now many things are in their favor, as Mr. Uday Kotak rightly put it, Cinderella moment for the banking. Credit growth is picked up, cost is on a lower side, NPS cycle is clearly behind us. So I think many things are in favor. That's why banking looks very interesting. And the second point about large cap versus mid cap banks, actually I think this is what the beauty about market is. So you have to see what is priced in. So many of these large cap have actually delivered very well, but I think that is a known thing to most of the investors, and that's the reason we've not seen a big move. Whereas in the other banks, the moment you see a positive surprise on the result, the reaction has been very different. Having said that, I would continue to like large cap banks. I think that's where we have a stable next growth ahead. Mid caps or opportunistic play, I think we have invested in few names. So I think selectively, I would say even where the franchise is great, where the liability has been good, market share gains have been decent, we are open to look at them and we invested in few. But first preference would be large cap, given that even today, even after the stocks have done well, the valuations are not expensive.
That was Srinivas Rao about the markets way ahead and what to watch out for. 30 points higher for the Nifty, taking a break. Stay tuned. Lots more lined up on that.
Presented by Axis.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में, वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
All meters
growth in individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at in the market?
It's clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this.
Welcome back. Well, let's talk about the stocks which are buzzing in trade. Let's start with Honeywell itself, which is seeing a spike of around 7 to 8%, and that after the global parent has actually raised guidance. They haven't spoken anything exclusively on India, but there's a rub-off impact happening there. Separately, we're watching out for the hospital stocks, the likes of Apollo Hospitals, Narayana Health, as well as Max Healthcare. All of these stocks are in focus given the fact that Medanta IPO opens in the coming week, and that's the reason we are seeing a bit of a reaction coming in when it comes to the overall hospital sector. Platform companies, however, are under pressure. Look at Nykaa, that continues to reel under pressure. It's now become a 3-digit stock. But separately, you also have Delivery as well as Zomato, which continue to be under pressure. Delivery now down about 350 rupee levels. Ahead of earnings, we have Tata Power in focus, Dr. Reddy's too, as well as Maruti. Maruti actually is quite excited ahead of its earnings, 1% higher on that one. And Tata Power, which is expected to report a robust growth on a year-on-year basis, is also holding up just marginally in the green. In terms of the earnings reaction and impact coming in, well, weak results were posted by the likes of SBI Cards, Tata Chemicals, and by weak I mean it was lower than expectation, and that's the reason these two stocks are coming under pressure, down anywhere between 3 to 5%. And Bharat Electronics, which came out with numbers yesterday, continues a downtrend today as well, so it's down 3% today as well. Remember, the order book has also seen quite a bit of sharp fall, and that's the reason that stock is coming under pressure. Wanted to flag out what's happening with Shoppers Stop as well. That stock too is in focus, decent amount of volumes there. Some of these logistic companies, the likes of Aegis Logistics, All Cargo Logistics, they are flying away in trade, so an up move of around 3 to 6% there. And RBL Bank is also showing a sudden spike. Remember, the stock had opened on the back foot after that massive 10% rally yesterday. Today we thought there would be a tad bit of retracement, but that's not the case. In the last few minutes, that stock has moved higher, 140 rupee level when it comes to RBL Bank. But clearly, it's Nykaa and the other platform companies that deserve a mention. So let's go across to my colleague Soumnath. He's standing by to help us understand what's the story that's happening in Nykaa. what has led to a bit of a fall that is coming into that counter as well? So Amit, take it away.
Well, for Nykaa, if you see, it has been continuously on a downtrend. In fact, the share prices are now below its IPO issue price of 1125. The current market share price are 10% below the issue price of 1125. And if you see the market capitalization of the company, it has more than halved since listing. On listing, its market capitalization was close to 1,04,000 crore rupees, while the current market capitalization is close to 48,000 crore rupees. And if you see the valuations, it was trading at an expensive valuation, though the current valuations are still expensive, but it's a tad bit lower than what it was earlier. And if you see its peak valuation, it was at close to 400x it's in April 2022, which has now come down to around 265x, what is the current valuation that we are seeing now. Why this has happened? Firstly, because of competition that has intensified in the both verticals and of the company, that is the beauty and the beauty and fashion and the garment business of the company. Along with this, if you see, the company has been chasing growth at elevated levels, which can be dilutive for the gross margins. That is what the analysts believe. And along with this, if you see, analysts also believe that the success of the fashion business can be difficult given the higher competition in that category, and slow tech penetration is also one of the major issues when it comes to Nykaa. Along with this, we have seen a big ticket resignation recently. The CTO Sanjay Suri resigned from the company, while the lock-in period of the pre-IPO investors are also expected to expire on November 10th. However, not everything's bad for Nykaa. On the positive side, if you see, the company is investing in new businesses. The unit economics has been resilient for the company. They are also focusing towards higher conversion and quality traffic, and there has been some good profitability and prudent capital allocation from the company's side.
All right, so Amit, interesting. Nykaa 1,000 rupees now. It listed at 2,400 odd rupees, and that's what you're looking at. Sun Pharma, let's pull up that stock. It's down about 2 odd %, but that's not the correct way to look at it. Let's look at Taro numbers. It's about 10% of their EBITDA now. $130 million is what they've done. It's a net loss. Expectation was for net income. If you look at the gross profit number, it came in at 67 million, but the EBITDA has actually come in at close to 1 million. It was expected to be 30 million. R&D expenses decreased slightly. However, Taro in their press release has said that there is a sustained price erosion in the US, which is definitely hurting the sales and margin. Also, there are some one-time adjustments in that relating to some acquisition or relating to some particular drug. However, no details about the product impact was provided as of now. 1 to 2% down, 991 for Sun Pharma after they declared numbers. Let's go to Harsh. He's with us. SBI Card is among the top losers in the F&O pack. He's telling us why.
We're looking at net interest income growing a solid 21%, but that still fell short of what most street analysts had penciled in. Two things which led to the slightly lower than anticipated number was, one, the revolver mix was slightly lower than anticipated, and that's due to higher spends, and the second piece is cost of funds went up. Now, cost of funds came in at 5.4%. also what the management has said, it's expected to go further higher to 6.1, 6.2%, but that should be offset by incomes as well. So that's largely on the cost of funds side. Now, where even when I'm looking at the absolute number in terms of cost of funds, up 20%, nearly 20% on a sequential basis, 45% higher when I'm looking at it on a year-on-year basis. This is, of course, your finance costs in your P&L account. Now, that has obviously led to a slightly lower PAT number. The other piece that's led to a lower PAT number is higher provisions. Provisions, in fact, went up nearly 20+% on a sequential basis. That's come in at around 550 crore. And that's the other piece leading to a lower PAT. PAT has come in up 52% on a year-on-year basis, has come in at around 526 crore, but that's still around 10% odd lower than what most street analysts had penciled in. That's really the miss. Now, of course, SBI Card has a 19% market share in cards, both spends as well as the number of cards issued. And largely their average spend per card is at par with the national average. So that's largely on the card spend. But overall, Q2 largely a miss. Going forward, at least the management commentary suggests that there is scope for improvement.
Okay, Harsh, thank you so much for that. And of course, we have seen negative, brokerage action as well. The target price have been cut. Analyst estimates are down anywhere between 5 to 10%. And we also had JP Morgan downgrade the counter to a neutral now. So that is something that we're watching out for. 5% lower for SBI Card. But Indus Towers too reported a weak set of numbers. Let's go across to Somit to understand of what were the reasons for this miss in the quarter gone by. Somit, hi, take it away.
Well, for the second consecutive quarter, it's a weak set of numbers reported by Indus Towers. Now, though on a Q-on-Q basis, you might see growth on the revenue, EBITDA, and net profit front, but there are a lot of adjustments that have been done by the company. And the first big adjustment that the company has done on the revenue and on the EBITDA front is there's a 1,000 crore one-time settlement gain which has come in, which has been recorded on the revenue, which has directly flown on to the EBITDA, and hence we are seeing at least a better performance compared to what actually it should be. On the negative side, if you see the adjustment that has been done is a 1,700 crore negative adjustment that has been done, and that's a provision on doubtful debt, and this is for the second consecutive quarter where they have provided a big amount. Now 1,700 crore is nearly 28% of their FY22 net profit, and this has been done because of a delayed payment from one of the large customers, which is most likely Vodafone Idea, and this continues to be a concern when it comes to Indus Tower, because for the first half of financial year they have provided for nearly 3,000 crore rupees, and given the fact that recently Vodafone Idea had issued debentures to ATC because they could not pay their vendor, the street is also expecting that similar kind of thing can be done with Indus Towers also, which has around 7,000 crore rupees of receivables from Vodafone Idea. So that's the biggest concern that has come in for Indus Towers in the second quarter of FY23. Along with this, if you see the gross debt on the balance sheet side, the gross debt of the company has increased by around 10% on a YOY basis, and they are also planning to raise around another 2,000 crore rupees via NCD, which would increase the company's net debt by nearly 333%, which is also a concern, because if you see the company's cash and cash balance is at its lowest in the last 3 years, which is very unlikely for a company like Indus Towers, which has been continuously generating free cash flows and has been giving dividends to investors in the past.
Let's also hear out the management at PNB Housing. We spoke to the new CEO about their strategy.
The GNPA front, yes, definitely we have a pool which we need to work. We had a lot of challenges post-COVID. I think now that's history. So from going forward, I think you can see improvement in the GNPA. Our focus would be largely on retail. So today the corporate book is 5,700 crores. So the book is degrowing. And we may start corporate book in future. We are not sure of the timeline. We want to bring down delinquency on the corporate book to a reasonable level and then think of restarting. So till that point in time, the story is going to be largely on retail. Now talking about margins at this point in time, I think it's really fluctuating, and therefore we feel that 2.2 spread and 3.2 NIM is what we will try and protect, so that we have fix on the margins for next few quarters. A growth of about 22 to 25% on the disbursement and book growth of 17 to 18%. I think if you can get this piece right, I think the rest all would fall in place.
Okay, so that's the word coming in from the management of PNB Housing. Yesterday, of course, the stock was flying away. Today, it is a bit more tempered. Tempered is something which the market is to 17,750 is where we are at. We'll take a short break and be right back.
With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
The market right here in ET Now with
Trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
A long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis
For the Nifty, a lot of numbers today. Dr. Reddy's should be declaring numbers any time. It is likely to deliver numbers today, and it will be the first large pharma company that will declare numbers. So there are 3 or 4 things to watch out for. So first of all, what the management talks about, the commentary in terms of pricing pressure. We already got you Taro numbers at the start of the show. They are saying there is pricing pressure in the US. What Dr. Reddy say will matter. Secondly, they had a very, very important quarter because Revlimid, which is the biggest drug that they have, or the biggest contributor to their SOTP or earnings for this year, was launched. So what happens to that? Is there a one-off? There is a possibility that, there may be some channel filling into that drug. So that's something to watch out for. Their base business for last 3 quarters in the US, I'm talking about, is being okay. It's not that great, it's not that bad. So that is something which essentially one has to see that, what is the sort of base business erosion they have seen. India has been doing well, expected to do well, and margins are something which are close to around 22 to 25 is what the street is anticipating. So that's the number to watch out for. The key thing will be what's the sales of Revlimid, what's the sales of US, ex-Revlimid, and India business margins.
Okay, and of course, we'll get you the management to talk about their numbers at 6:30 p.m. later today, so you don't want to miss that. Watch out for Dr. Reddy's numbers as well as the special coverage at 6:30 p.m. only on ET Now. But it's not just Dr. Reddy's. We have Maruti also that will be reporting numbers. We obviously know that the volume growth this quarter has been quite strong. Will it be matched by a realization growth, and how would the margin picture look like? We have Trishti joining in with all the expectations.
So when it comes to Maruti Suzuki, we'll try and compare the numbers on a sequential basis because same quarter last year was a washout one. When it comes to volumes, there was a jump of 10.6% and similar kind of a growth we are expecting in the top line of the company. 12% jump and 29,558 crores is what we are expecting. EBITDA number is expected to show a jump of 50%, and when it comes to margins, an improvement of 250 basis points on a sequential basis is what we are expecting, and 9.7% is the number on cards. A lot of factors could be attributed to this. Firstly is the price hikes being taken, forex benefit because lower RM import costs led by the benefit of yen depreciation against INR will be benefiting them. Operating leverage as well as input cost tailwinds are some of the other factors. But apart from that, when it comes to profit figure, a 91% jump is what we are expecting, and 1,935 crores is the number. Apart from that, we'll be watching out for how has been the festive sales for the company this time around, how is the realizations holding up, and going forward, what is the sales outlook when it comes to the entry-level segment especially. We'll be watching out for all these factors.
Okay, and the Maruti management too will join us at 4:30 p.m. But we also have Tata Power's numbers to deal with, and there is the address coming in from that management at 5:30 p.m. as well. So watch out for that particular interaction as well. As far as the numbers go, we are looking at a revenue growth of almost 30-35% on an annualized basis. The profit figure should be close to 700 crore rupees. But remember, with Tata Power, usually there are a lot of one-offs and adjustments, so we'll have to watch out for that. But fundamentally speaking, on an operational basis, we are expecting an improvement. That is because there was increased generation at Mundra power plant last year. A part of it was shut. That is expected to come on stream this year, and that's the reason we are expecting a big growth coming in from the Mundra business itself. Separately, there was a lot of pent-up demand this year as well in the quarter gone by because of the increased heat, etc. So the distribution business too is likely to perform better. The company has been putting a lot of focus when it comes to the renewable business, and now we are talking about an increased order book for the solar EPC business, and the execution has also picked up, and that is something which will flow into the P&L this time around as well. Remember, as far as the under recovery is concerned at Mundra, that is also expected to go down because at the start of this year the company had gotten into a temporary agreement and arrangement with various states to increase the tariff at Mundra. So the under recoveries that we saw last year will not be there. Of course, the company has already given us a future roadmap even of FY27 of what kind of numbers they are expecting, both in terms of financials as well as operational performance. So any commentary in progress of that will be very important to track. Plus what's happening with that Mubadala deal wherein BlackRock etc. were going to invest a sum in the renewable business. The update on that will also be important. The stock is a bit tentative, lower by just around 0.1%, so we'll watch out for that as well, Pankaj.
So from power to metals, let's go to Ashesha. She's standing by with what to expect from Vedanta.
Yes, so lower realizations and higher cost of production are expected to impact Vedanta's numbers this time around. Revenues are expected to decline by as much as 10% on a quarter-on-quarter basis, and we are expecting a big knock as far as the bottom line is concerned. In fact, margins are expected to come in at 21% this quarter versus margins of 26% that the company reported in the previous quarter. Important to note that company reported margins of nearly 34% same time last year, indicating that margins are expected to see a big knock both on a quarter-on-quarter as well as on a sequential basis. Even as far as the profit after tax is concerned, we are expecting a decline of 50% on a quarter-on-quarter basis, and this is primarily because of lower realizations this quarter. Aluminium prices declined nearly 18% on a quarter-on-quarter basis. Crude, zinc and lead prices also declined anywhere between 11 to 20% on a sequential basis. Talking about segment-wise performance, aluminium segment is expected to disappoint this quarter, and it is going to be a biggest drag as far as consolidated results are concerned, and that is because of higher cost of coal and lower realizations. Oil segment is also expected to be a key drag, and that is because of imposition of windfall tax and lower crude oil prices. In terms of management commentary to watch out for, update on opening up of thermal coal mines and commentary on measures to reduce aluminium costs will also be crucial. But all in all, we are expecting weak set of numbers, and that is because of lower realizations this quarter.
Okay, so talking about the metal space, we also spoke with Rakesh Arora to understand where we are in the cycle and which are the top bets or sectors which are likely to perform better when it comes to the metals pack. Listen to what he told us.
Iron ore is one space where I'm more comfortable with. Here, the cost structure of the Indian mining industry, iron ore mining industry, has changed, and costs have increased by 1,500 rupees per ton. And this gives a huge advantage to the incumbents who are still in the old regime. So there are a few companies like NMDC, Godavari Power and Ispat, etc., who are still at the old regime and have this massive competitive advantage. And all these companies are cash rich. So I think this is the place where people can probably look to hide.
Well, let's go across now. An important development update coming in on IDBI Bank divestment. Meghna is now with us. She's been tracking the full story.
Right, so for IDBI Bank tragic sale that we know Deepam had earlier invited the EOIs at the deadline to raise a query was October 28th, and to submit the initial bids is December 16th. Now what the change has been brought is that the 13 days extension has been given to the deadline to raise a query, so that deadline has been extended till November 10th, and the initial bid submission still stays at December 16th. Now we do know that the government and LIC combined, they are selling over 60% of stake, and currently which they hold over 90% of stake combined in IDBI Bank. After this tragic sale, the combined stake will be approximately 34% in IDBI Bank. Now we also know that after the initial bids come in, the interested parties will have to clear the fit and proper assessment criteria of the RBI. They will also have to go through the security clearance of the Home Ministry to proceed ahead for the next stage of due diligence. So that is the criteria that they will have to go through at the EOI stage itself. Now this tragic sale of IDBI Bank definitely, as we know now, will be completed only in the next financial year, because after the EOIs are received, the deadline is December 16th. The next stage will be of the financial bids, the due diligence will be held. So that will happen probably in the quarter fourth, or it might even exceed till the first quarter of the next financial year. But definitely the tragic sale is getting completed only in the next financial year. But as of now, the deadline to raise a query has been extended till November 10th.
Okay, Meghna, thank you so much for that. But let's move on and talk about what's happening at Air India. In the latest edition of Rendezvous at Taj, Nayantara Rai caught up with Air India CEO Campbell Wilson and Indian Hotels MD and CEO Puneet Chhatwal at the Taj's upcoming Loya restaurant. Stay tuned for that exclusive chat where Wilson shares the airline's flight plan.
The peers that we're benchmarking ourselves against are the Qatars, the Emirates, the Singapores and the others of that ilk. The quality has to be consistent and very, very good. The quality of service, of product, the reliability, the aircraft, the technology, all of the things that people expect when they experience an airline. Now, we've clearly got some way to go to get there, but now that we're in private hands and the investment and the ambition is very, very clear, we're starting on that journey. We're very confident that we can do it.
You mentioned Qatar Airways, you mentioned Emirates, and you mentioned Singapore Airlines. Now, we all know Singapore Airlines, of course, has their joint venture with the Tata Group for Vistara. What's the flight plan going forward?
What's the flight plan? Well, we've got a very clear flight plan for Air India. We're calling it Vihan.ai, which is Sanskrit for a new dawn. And it really involves three phases. The first is what we're considering the taxi phase. fix all of the legacy issues that have accumulated over the years, whether it is punctuality, seat quality, service quality, website, pending refunds, all of these things we're focusing on addressing at effectively a war scale. Then when we come into next year, it becomes the taxi and takeoff stage, whereby we start and continue investing in systems and process and people in order to bring ourselves to very good. Then we get to the climb phase in about 3 years' time, where it's doing all of those thousands and thousands of little things better and consistently to go from very good to world class. It's also about expansion. We're looking to expand the airline fleet by about 3 times. We're looking to expand the market share considerably to about 30% domestically and internationally. And we're looking also to simplify the structure of the group. At the moment, Air India contains Air India and Air India Express. It's no secret that Tatas also have a stake in Air Asia India, and so we want to rationalize that structure. You mentioned Singapore Airlines. They're obviously an investor in the 4th airline in the Tata Group, Vistara. As to what the future holds there, I think that's more of a matter for shareholders, but whatever comes down the pitch, we shall play.
So what is it going to be? It's going to be Air Asia, Air India and Air India Express all under one umbrella? That's the rationalization you're talking about?
From a corporate perspective, yes. From a business model perspective, there will be a full-service airline and a low-cost airline, because the market clearly needs different things for different people. Different routes are more aligned to a low-cost model, some are more attuned to a full-service one. So we need to have both in the stable, and we'll deploy either vehicle which makes the best sense for what the consumer really wants.
Has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember you know, I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here, ET Now, I've been getting you bit by bit.
the voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is market.